Joining us now is the Heritage Foundation Chief Economist and Unleash Prosperity Senior Fellow, EJ Antoni. EJ, so glad to have you with us to talk about what seems like a lot of momentum. We're seeing strong growth. Inflation is slowing. Consumers still spending. I don't know about you, but this kind of feels like a Goldilocks situation. What do you make of it?
Yeah, Lydia, I think there's a lot to say for that. I mean, look at the inflation data we got just last week showing core inflation down to its lowest level in 4 years. Tremendous news there. At the same time, we're seeing great growth numbers with today's GDP report. And I want to highlight the fact that this isn't like it was during the Biden years when you had a disproportionate amount of growth coming out of government, where it was just government spending and borrowing that was making the headline number look better. For the 3 quarters that we have so far this year, federal government expenditures have actually been down. They're down at an annualized rate of about 2%. That's fabulous news. And again, that means that all of the net growth we're seeing is coming from the productive private sector. So really good news on that front. At the same time, the consumer seems to be very, very strong. We're looking at a very, very good year next year for investment because of the provisions in the big, beautiful bill. We've seen imports down, exports up. That's helping as well. Production is way up. We're seeing productivity numbers come in really, really strong. I mean, Lydia, there is a lot to love right now about the economy.
Now, at first, the market took it in a bad way because they were thinking, you know, it's so strong, and the Fed believes, I think incorrectly, I think you think incorrectly too, that if you have strong growth, you automatically have higher inflation. We didn't see that happen during the Reagan administration, during the first Trump administration, up to the pandemic. But a lot of people in the Fed still think that way. Do you think that's going to discourage them from any more rate cuts until there's a big change at the Fed in the springtime?
Well, Dave, I agree with you that it's a huge, huge problem, that they are stuck on this Phillips curve mentality that has just been proven wrong time and time again through the decades, and yet they are still stuck on it. However, David, at the same time, I don't think that that's their primary issue right now, or their primary focus maybe. As much as they talk a lot about the unemployment rate and the inflation rate, they really have their hands tied because, in short, they're trying to maintain a very novel monetary framework that they first built in the spring of 2020, and they're really having a difficult time holding it together. And so as interest rates in various money markets are moving in ways the Fed doesn't like, it's basically forcing the Fed's hand. And I would anticipate that's going to continue next year. And so while you may get a pause at the next meeting, don't be surprised if another rate cut is to follow. And
EJ, I want to get your thoughts about tariffs and, kind of the role that tariffs may have played in, today's GDP report. Was it in part because of tariffs, or was it maybe some, I've heard say, in spite of tariffs? And I'm asking this question because we are waiting for a decision from the Supreme Court that could come, we've been told, essentially any day, maybe around by the end of this year. And we don't know what they're going to decide, but there's a possibility that they could say a big chunk of the tariff policy might have to go away. How could that, if that were to happen, what kind of impact could we see kind of play out moving forward into 2026 when we're talking about these growth numbers?
Lydia, it's a great question. And I think one of the things we have to remember is that the president actually has a lot of other tools in his toolkit when it comes to tariffs. In other words, IEEPA may go away, but he's got 232. He's got a lot of other mechanisms by which he can impose those tariffs. They might not be as fast. There might not be as much mobility there for the administration, but it can still be done. And so at the end of the day, I'm not going to say that the IEEPA tariffs are simply going to go away so much as they might be replaced. The other important thing to consider is that the tariffs are not the only thing in the mix right now. The tariffs are happening at the same time you're seeing massive deregulation. You're seeing tax cuts. You've seen considerable restraint on federal spending, much to the contrast of what we had the previous 4 years. Again, we touched on that with the GDP numbers we were just talking about. So I think there are a lot of dials that are really lining up here to produce these kinds of blockbuster GDP numbers that we got today. It's not just the tariffs, but it's also not just the tax cuts. It's not just the deregulation. It's all of those things, plus pro-energy policies too, and more.
Now, EJ, for all the talk of Democrats about affordability, there are 2 words you never hear from them: gas prices. You know why? Because gas prices are projected to drop to $2.79 a gallon on Christmas Day, is according to Gas Buddy. This is down from $3 a year ago, roughly where prices were before the COVID pandemic. The drop set to save drivers about $500 million nationwide, and none other than President Obama used to say people will vote on the basis of how much they pay to fill up the tank. So do you think maybe that would cut into the Democrats' arguments about affordability?
Oh, David, certainly. And look, I think we really underestimate here not just how much energy impacts the consumer in terms of what you're highlighting, where, yes, you have to fill up your tank every week, but what about the groceries that you're throwing in the back seat? You know, every time you grab that gallon of milk off the shelf, the bag of bread, carton of eggs, bag of chips, whatever, that all got to the grocery store on a truck. It was fueled by oil. This time of year, you're seeing a ton of Amazon delivery vans and trucks drive around your neighborhood as people do their last-minute Christmas shopping and deliveries. All of those vehicles are fueled by what? Almost all oil. Yeah, you have a few natural gas vehicles here and there, but still, it's all part of the same story, right? Which is this. This president is maximizing energy production in this country. We are at record highs in terms of how much oil we're pumping per day, and as you increase supply, you put downward pressure on price. That's Econ 101. But because energy goes into the price of everything we do and everything we buy, you're reducing prices throughout the whole economy, not just the price at the pump, not just your monthly utility bill.
Yeah. Well, EJ, Merry Christmas to you, no matter how much you have to pay for gas. Great to see you, my friend. Thank you very much.
Merry Christmas, EJ.